What's up everyone, this is Kenny here from Property Stories, and today we're going to talk about interest-only loan. So what is this interest-only loan? Interest-only loan, as the name implies, is where a loan package allows you to pay the interest only for a number of years before you start repayment of the full installment. Remember, when you are paying the loan, you have two parts, okay? One is the interest and the other is the principal. Hence, when you are repaying a housing loan especially, which you have to see going down in terms of your outstanding balance after every year that you repay. I'm only referring to the interest only mortgages in this video. Let me show you an example. So in this image, you can see there's a 500,000 property price. So down payment 10%, right? 50,000. MRTA is 20,000 assuming. So the length of mortgage is 35 years and the annual interest is 3.15, for example. So the total loan that you'll be paying is about 470,000, the loan amount, right? And then the repayment, the money repayment, next image. Look at the money repayment, 1848.37. So it's 1849 roughly, okay? However, this amortization table, the next graph, you can see your loan has two parts, right? Amortization will show you the principal and the interest, how much you're paying the installment, right? When it's going towards the principal and the interest. You see, the first year itself, the principal is 614.62. However, the interest is 1233.75. So it's about 1234 a month. So in the interest-only mortgage, right, you are only paying 1234 a month instead of 1,800 previously. So you are saving about 600 ringgit there, and then you will pay later. This interest-only loan is aimed at people who wants to increase their cash flow, especially property investors. Imagine today if you buy from a developer, you get a rebate. Let's just say 100, 200,000. Then if you have to pay the full installment, it will reduce your cash flow, right? Because that rebate there, you also need to pay renovation and maintenance fee, all this. So this product, right, if you take this product for the first 5 years, at least you have some increase in cash flow and a little bit of a competitive edge. So Kenny, is this product just like house keys? It sounds like house keys like that. No, this product is not like house keys. You are not allowed to walk away after 5 years like house keys. Like house keys, after 5 years, right, you can say, okay, I don't want to buy the house, I'm walking away from the agreement, the tenancy agreement, or I want to continue renting. This one, no. Your name will be on the SMP. You are the owner of the house. We just change the way we bill you, okay? The next one is that the DSR, right? Yes, I know house keys from what I've spoken to some Maybank bankers. Maybank Houz Keys, they calculate, right, the DSR based on the rental, which is very low, and that's why easy to pass. Many people actually pass this loan like that. However, for this interest-only mortgage, the calculation is based on 30 years, the full tenure, okay? It's not based on the first 5 years interest. That is going to be very low and a lot of people are going to be easy passing. Using the earlier example in the video where you have 470,000 in loan, you can see this, right? We will calculate based on full installment, 1,800. And not 600 ringgit based on the principal here. No, it's not 600 ringgit. Welcome back everyone. This is Affin Home Step Fast, and it's the Affin Bank's offer for interest-only mortgage. So in this presentation here, I'm going to go through the product features and how it will benefit you, especially in the area of increasing your cash flow. So let's begin, shall we? So what are the features? Firstly, this product, right, as the name implies, home is only for residential purposes only, okay? Residential properties only. The loan margin, it can go up to 90 plus 5, of course, the 5%, it has to be MRTA or legal fees and stamp valuation fees. Yes, it's applicable to both undercon and subsale. And this 90% also, of course, is subject to approval. Loan tenure, 30 years or 70 years, whichever is earlier. Yes, this product maximum 30 years and 30 years. There's no 35 years for this product. There's no lock-in period. This product has no lock-in period. So the moment you buy, you can actually sell if you want. You will get a good price. Next is interest only. You'll be paying interest only for the first 5 years upon getting the keys. What this means is you are paying the interest for 5 years upon full disbursement. So if you are buying an project, under construction property, let's just say it takes 4 years to complete. These 4 years, right, you'll be paying progressive interest, right? Correct? But the interest loan only starts at the 5th year when it completes. So in total, you have 4 plus 5 years of paying only interest, which is 9 years of paying only interest in a 30-year loan. Alright? So imagine how much money you can actually save in cash flow. Next up is Sharia compliant. Yes, this product is Sharia compliant. We do have an Islamic version for this. This product is applicable to both undercon and completed properties. Okay, refinance can be done, but only no cash out. Refinance with cash out cannot. So completed properties only. Next up, let's just see the calculation of installment, shall we? So Affin Home Step Fast, right, which is the interest only mortgage, you see is 500,000. Then you have 90%, you have 450,000 loan, right? So let's just assume the MRTA is about 12,500. Total loan is 462,500. The tenure is 30 years and the interest rate is 3.15. So for the first 5 years, you'll be serving this interest 124.06. No principal. The principal starts on 6 years onwards. So it becomes 229.48, which is 2230. You count 2230. So how this figure arrived, right, actually is the internal calculator of the Affin Banker. Okay, they will add the principal to the. This is a comparison between the interest only mortgage versus the normal product. Okay, so you can see here on this first part here, A is Affin's Home Step Fast, which is 500,000. Let's just assume the purchase price is 500,000. The margin is 90%. Loan amount 450,000. MRTA assuming is 12,500. Total loan amount is 462,500. So tenure is 30 years. Interest rate is 3.15. It's the same for other banks offering. Let's name this C. So differential sum comparison is where you will see the magic happens. The first 5 years, remember you're paying interest only 1214.086. Subsequent years is 229.48. This is how you get this. It's actually a calculator. There's a calculator I'll show you later. For first 5 years, if you compare with the installment here, the full installment, 1987.53, right? So for the first 5 years, 197.53 minus 1214.06, you get 773.47, which means every month you get 700 ringgit in the pocket extra. Thereafter, of course, it will be negative, negative 200 over ringgit a month, because you'll be paying back the principal plus the interest, the principal that is delayed for 5 years plus the interest, correct? Next, let's just say we talk about you have an instrument which gives you 5% a month, and you put that every month. Every month for 5 years. At the end of the 5th year, you will receive this around 54,000 as a total return. If you have a salary increment, assuming you start at 7,000 a month, increment of 5%, then salary is year 6 is 9,000 perhaps. So Kenny, this one 30 years, you compare 30 years. How about 35 years? Okay, I got you. Here's the comparison for 35 years. Because most banks out there offer 35 years, right? So all the same. Step Fast and Bank C, offering C, all the same except for the tenure. One is 30, one is 35. So you see the installment, right, is 18.87 for the normal term loan, which is not much difference, if you ask me, from the previous one, which is 19 something. So it's about 100 over ringgit. And going to this, right, if you compare differential sum, you are still putting back money 600 over ringgit a month, which is, of course, when thereafter you have extra of 200 ringgit, which is 410, you'll be negative 410 on 6 year onwards. You put this in the investment, which has 5% return a year, you will get around 42,000 at the end of 5%. Okay, this salary here is the same as the previous slide. Next up, we go. Okay, let's look at this diagram. The higher the loan amount, the more you save. Assuming the tenure is the same, of course. 30 years. A normal housing loan, the monthly installment is, let's just say 1 million, 4298 monthly installment. However, if you take the interest only mortgage, Affin Home Step Fast, you will only be paying 2625 a month, which you save 1673 every month, 1600 in the pocket. Who want to give you, right? Good or good? Sure, good lah. Let's see some examples, shall we? Okay, this is a cash flow projection that I did using example. Okay, so imagine here the money repayment is 773.47. This is from the previous slide. We're assuming the rental is 2000, the maintenance fee, for example, 300. Let's just say 300 is, ignore other fees, quick rent, insurance, all this. We don't talk about it first, because as we all know, the biggest expenses in property investing is always your bank interest. Monthly cash flow 2000 minus 700 minus 300, so you are having extra 926 ringgit a month. Okay, so 1 year, 926 times 12, this is how much you have, about 11,000. How about 5 years? 5 years you have about 56,000. Okay, 56,000. These are assuming you didn't compound. Okay, just the cash in hand, that's how much you will get at the end of 5 years. So these are the few unfair advantage, I would say, when if you take an interest only mortgage. It's easier to achieve positive cash flow, break even for rental. What I mean, let's just say you face with a higher competition, a very steep competition, everybody want to rent out, everybody throwing price. You can afford to go lower. You can afford to go lower if you want, because you will already achieve positive cash flow or break even. Okay, you can afford to go lower and wait until the situation get better. Next, no login. You get the keys, you want to sell, there's no penalty. When you get the keys, who knows, you renovated and the buyer actually loves the place, want to pay you, you don't have to worry about penalty, just sell. This one, right, it goes a lot with the sub-sales. If you're buying sub-sales, and let's just say you get to buy a very low price, very good price, you snap up the deal, you refurbish it, and then you sell. So you don't have to worry. This one is a strategy you can use. Buy, fix and sell. It's a fixer upper. Next, if you buy from a developer, you have a rebate and cashback, right? So now you get more cash in hand. As your repayment is lower, you can see from the previous diagram, the repayment is lower. So if you get the rebate from the developer, the cashback rebate, you will go further because if the repayment is lower. The last one, if today you meet a customer who's 50 years of age, you can't get a 35 years loan, correct? But you still want to invest in property. 50 years, still have a lot of money and just have very little facilities, very little commitment, can pass one. What you can do, right, is to suggest to this customer to take this Affin Home Step Fast, as the repayment will be lower. So if they are investors, right, once your customer buy this, and then the customer can sell later. So why is this so? Imagine this, because the interest tenure is always at first 5 years. It doesn't matter how long the tenure, right? The first 5 years you are always paying interest. So what does this mean to this client of yours? If he's already 50 years old, he's paying the same amount of interest as someone who's taking a 30-year loan. So it's a big advantage to the client to actually take this product. Your client who's 50 years old is paying the same amount of interest as someone with a 30-year loan. So that's definitely an advantage to your client, right? This is something you can propose to them. Next, if you get your money, your cash back or your extra cash flow, what can you do? Young people like to travel, right? Travel, you can invest, you can put towards your savings or your pension, retirement. Okay, this is your retirement. Or maybe you got a new car that you want to buy, this month, a new month, go and buy a new car. These are the possibilities that you can take with your money. To all the real estate agents and also developers, if you have any more questions to see how we can work together on this product to help you sell more properties and convert faster, you are welcome to reach out to me. You are also welcome to follow any of my social media handles that you can see here. I try to post as much as I can on all these platforms, alright? That's it for me. This is Kenny here from Property Stories, and I hope to see you again in the next video. Bye bye.